Hi everyone, hope you have gone through all the other videos in the dividend stock portfolio series. So this is the last video where we are going to take up a real world portfolio and tell you how interesting is dividend investing and how it can help you retire early, how it can help you build a huge portfolio within a short period of time. So what is your primary goal? You want to build a passive income stream that covers your living expenses. You don't have to depend on your monthly salary or yearly salary for your day-to-day expenses. So a dividend portfolio can actually help you to achieve that goal. So can it replace your monthly salary? Let's build up an actual portfolio and see whether it actually solves your problem. So So what you have to do, you have to build a well-diversified portfolio of high-quality dividend stocks, have a core portfolio with large caps, and then have some mid-cap companies that are growing well and are consistently paying dividends, and then have some risky companies with high dividend yield. So you should always have a long-term perspective in mind when it comes to investing in dividend stocks. The other thing is, the most important thing is, you have to reinvest your dividends for the compounding effect to take place. We'll look at this particular point in detail in the next few slides. Let's get into a real world dividend portfolio. So let's say you have 20 lakhs in hand. There are two options. You can purchase a flat at 1.2 crore, pay this 20 lakh as initial payment, and then take a loan of 1 to 1.1 crore and start paying EMIs for the next 25 to 30 years and have a real estate yield of 2 to 4% and a rental yield which is going to be less than 1% for that particular flat. So the other option is to invest that money on dividend stocks, stable, steady stocks that make sure that your capital is safe, and at the same time it will help you to build wealth, create passive income. So 20% we are investing in ITC, Karnataka Bank, Infosys, Power Grid 15%, Whole India 20%, HCL Tech 10%. So I've taken six companies with different dividend yields between 2 to 7.5%. So the average dividend yield is 4%. The total investment is 20 lakhs. So here we are considering different scenarios for investment. One is with reinvestment. What if you reinvest the dividend that comes up? The other one is what if you don't reinvest? How much does your wealth multiply? So let's look at scenario one with dividend reinvestment compounding. So 4% dividend yield is what you are getting in this portfolio. So we are taking a bare minimum capital appreciation of 5%. Let's say ITC is trading at 100 rupees today. By next year, it will be trading at 105 is what the assumption is. This is a very, very bare minimum conservative estimate. So every year you have 5% capital appreciation and 4% dividend. So in this scenario, we are reinvesting all the dividend. Basically, if you get another 4 rupees, you you purchase ITC shares again. You purchase Infosys shares again. Whatever dividends you are getting, for example, you are getting 80,000 rupees dividends in the first year. So all of this money will be reinvested back into some of the shares that we have in our portfolio. So if we do that, so 20 lakhs will become 30.77 lakhs by year 5. So your yearly dividend will become 1.23 lakhs from 80,000. Your yield is 6.2%. So if we continue to reinvest, if you continue to get a capital appreciation of 5%, you'll have 47 lakhs by year 10, 1.12 crore by year 20. By year 25, you'll have 1.7 crore. So basically, your portfolio has multiplied from 20 lakhs to 1.7 crore, which is a good number. And you will get a passive income of 7 lakhs every year, 6.89 lakhs every year on this portfolio. So the yield on your initial investment is 34.49%. So this is a for worst case scenario when it comes to capital appreciation of just for 5%. So let's look at another scenario where your capital gets appreciated by 8%, which is again still not a great number. Typically, you'll get 12 to 15% capital appreciation in some of these solid companies. So the worst case is 5%. The median case is 8%. We are considering 8% here. So you start with 20 lakhs. So you get a dividend of 80,000, you reinvest it. So year two, 20 lakh 80,000, it will again multiply by 12%. So every year this happens. By year 5, you have 35.2 lakhs, year 10, 62.1 lakhs, and then year 20, 1.9 crore, and you end up with 3.4 crore in 25 years. And the what is the dividend you are getting? You are getting 13.6 lakhs every year as dividend. So basically around 1.2 lakhs every month and a dividend yield of 68% on your initial investment. So you have only invested 20 lakh. You are now getting 13.6 lakhs every year, which can cover your daily expenses. So what you are actually doing is very, very simple thing. You're you're investing an initial amount and building a dividend portfolio with some of the solid companies with strong dividend track record, strong fundamentals and business values. And without doing many things, by doing some basic things, we are able to generate 13.6 lakhs every year without any additional effort. So, can you retire with this passive income? So let's say you're recurring 30,000 every month now. So, after another 25 years, 1.5 lakhs should be enough per month to run and manage your monthly expenses. So if you invest more money or reinvest longer, retirement can come sooner as well. So in the first scenario, we had 8% with reinvestment. Can you retire after year one? You get 80,000 per annum now. So year five, 1.23 lakhs yearly income. So no. Year 10, 1.9 lakhs. So year 20, you get 4.5 lakhs every year. So you can partially consider retirement. Year 25, you get around 7 lakhs. Again, this is not that big a number to retire. So in the second scenario, where 8% capital appreciation plus 4% dividend yield, you are getting 80,000 year 1, 2.5 lakhs in year 10. By year 25, you have 13.6 lakhs coming to your bank account every year without you putting any additional effort. Even if you are sleeping, money will keep getting credited in your account. That is where the saying goes, make money even while you sleep. So can you retire with this amount? Yeah. If you have only got 1 lakh per month expense, yes, obviously you can retire. So let's look at another scenario where you are not reinvesting any of your dividends. So without dividend reinvestment, your compounding effort is just 5% growth rate. So what you are doing is year one, you are getting 80,000 yearly dividend. You are not reinvesting that money. Instead, you are taking that money and spending it for your personal expenses. So by year five, you'll only have 25.5 lakhs, 32 in year 10, 53, and you'll only have 67.68 lakhs as a portfolio value if you are not reinvesting. Whereas if you are reinvesting, you can get to 3.54 crores. Whereas if you're not reinvesting, you're only getting 67.68 lakhs. And your passive income is also a very small 2.53 lakhs per annum, which is not at all enough to retire from your daily job. So now let's look at another scenario. Let's say you're compounding at 12% with dividend reinvestment and capital appreciation at 8%. Additionally, let's say you're adding an additional investment of 5 lakhs every year to your portfolio and you're purchasing the same dividend shares with this money. Let's look at where this takes your portfolio to. So initially you have 20 lakhs, you get an 80,000 dividends. So by year one, you'll have 22.4 lakhs by investment and you'll have let's say you invest additional capital of 5 lakh, you'll have 27.4 lakhs as the new portfolio value, which will eventually become 30.68 lakhs in year 2. And you add another 5 lakhs, so it becomes 35.68 lakhs. Now, on top of it, you'll have 12% growth, so it gets to around 40 lakhs. So your dividend also grows to 1.6 lakhs. You add another 5 lakhs. So by year 5, you have 62 lakhs, 67 lakhs here, additional investment. So by year 6, 75. So if you go on like this, your dividend income is 6.7 lakhs in year 11. And in year 10, you have a 1.4 crore portfolio in year 10 itself with 5.79 lakhs yearly dividend. And by year 15, what do you have? You have 2.9 crore. And you look at the next 5 years, you have 5.4 crore in year 20, and you add additional 5 lakhs. So every year you keep adding 15, 16, 17, 18, 19, 20, and from 21, you keep adding another 5 lakhs every year. By the end of year 25, what do you have? Wow, you have a portfolio that is worth 10 crore. This is again the capital appreciation of just 8%. Imagine if it is 10 or 12% capital appreciation, then your portfolio can actually double or triple from here. You can easily have a 30 crore portfolio. Whereas in this scenario, you can easily get to a 10 crore portfolio. What do you have to do? Start with an initial amount, say 20 lakhs or whatever you have, and then reinvest some money, reinvest all the dividends, have some capital appreciation, and then add additional capital every year on a consistent basis. Choose a set of dividend stocks, companies with strong dividend track record, good dividend yields, strong fundamentals, strong business growth, large cap company, a company with sustained profitability, and companies with low debt. Look at some of these basic things. You don't have to be a genius to be a successful investor. You can easily build a 10 crore portfolio by following some of the basic things, by looking at some of the very basic parameters, avoiding red flags when it comes to dividend investing. You can build a dividend stock portfolio and have a great early retirement. So you can build a portfolio of 10 crore. And what are the yearly dividend that you have here? This is 40 lakh per year, which is awesome. And what do you get per month? You get 3 to 3.4 lakhs per month, which is more than enough to manage your expenses on a daily basis. So you can retire with a 10 crore portfolio and a 40 lakh per annum passive income in 25 years. If you add additional capital, which is more than 5 lakh, if you add 10 lakh, you can retire in 15 years or 12 years. That is the power of compounding. That is the power of dividend investing, which is why I had come up with a series of videos to tell you the benefits and advantages of dividend portfolio, especially in a falling market like this. So because in this market you get all these stocks at a cheap price, but dividend yield is going to be very high because all the stock prices have crashed from their all-time high. They have come down over the last 6 months. So you'll get very high dividends for a small amount. So you'll have very high dividend yield now. And since the stock prices are available at low valuations now, your capital appreciation will definitely be far higher than 8%. Imagine India's GDP growth itself is around 6% now. So 8% is bare minimum. You can easily get 12 to 15% return on this portfolio along with the 4% dividend yield. So, so these are the key learnings when it comes to dividend investing. So you have to reinvest your dividends. You have to stay patient. You have to stay disciplined. Start as early as possible. If you're in your 20s, start quickly. If you're in your 30s, still not late. If you're in your 40s, even still it is not late. Start as early as possible with whatever money you have. Invest consistently. Don't stop investing when market goes down. Don't stop investing when there is a fall, there is a significant correction. Market eventually keeps going up in the long run. So compounding is the eighth world wonder. It is the best friend for you. If you want to participate and make sure that compounding multiplies your wealth, start building a dividend portfolio for retirement now. So these are the four scenarios we looked at. Without reinvestment, you will only have 67.68 lakh portfolio and an annual passive income of 2.53 lakhs and a 21K monthly income. So with reinvestment at 9%, 1.7 crore portfolio and 7 lakh annual income with 58.3K monthly. With reinvestment 12%, 3.4 crore, 13.6 lakhs annual income and 1.13 lakhs per month, which is reasonably enough to retire. Whereas if you reinvest at 12% and add additional 5 lakhs every year, you'll sit on a huge portfolio of 10 crore and a 40 lakh annual passive income, which is more than enough for you. I'm very sure if you purchase a flat with 50 lakhs down payment and 80 lakhs to 1 crore loan, it'll definitely not get to 10 crore in 25 years, and it will definitely not give you 40 lakh annual income. You'll definitely not be able to get 3.3 lakh rental on that particular flat, and on top of it you have to keep paying debt every year. You have to keep paying interest, you have to keep paying EMIs. So all these things are there. So dividend investing is one of the best strategies to build wealth. It is not followed much in India. You don't have too many Indian top investors doing this. You don't have too many retail investors doing this, primarily because growth stocks are in demand. There are too many things that are being said. Trading is given too much importance. So because of which, and then mutual funds are given too much importance. There are too many agents who come up and sell ULIPs and all those things. So because of which, dividend investing is not something that is followed much in India by retail investors. I hope this series was very helpful. You can think through and come up with a dividend portfolio. So all the stocks mentioned here are for educational purpose. You can go through them in detail and build a dividend portfolio and start reaping rewards. Let's build a 10 crore portfolio in the long run. Yeah, that sums up my dividend investing series. If you like this video, please subscribe to our channel. Please like, share this with others as well. Thank you. Happy investing.